darkest times, are you all good? Are you alright? I'm in your neighborhood. For your darkest times, are you all good? Are you alright? I'm in your neighborhood. For your darkest times, are you all good? Tell me how you feel. Are you alright? And we're all alone. I'm in your neighborhood. I wanna whisper you something. For your darkest times, you already know. Are you all good? Tell me how you feel. Are you alright? And we're all alone. I'm in your neighborhood. I wanna whisper you something. For your darkest times, you already know. When all you want is to disappear, searching for wisdom, but nothing's clear. What will become of me if you're not here? I know life is a mental place where there's always fear. Are you all good? How you feeling? And we're all alone. I wanna whisper you something that you already know. Are you all good? Tell me how you feeling. Now we're all alone. I wanna whisper you something that you already know. Are you all good? Tell me how you feeling. Are you alright? Now we're all alone. I'm in your neighborhood. I wanna whisper you something for your darkest times that you already know. Are you all good? Tell me how you feeling. Are you alright? Now we're all alone. I'm in your neighborhood. I wanna whisper you something for your darkest times that you already know. Are you all good?
This is Oliver, and welcome back to another video. In this video, we're going to talk about the recent trade I took and the framework behind it, which is a New York continuation setup. So, before I dive into the details of the trade, we need to go into the narrative behind the trade. So, where was I looking for the market to draw towards so that I could frame clues on the 1 hour and 15 minute and trade in that direction? So obviously we've been trending and the market has been very strong as of late, and that's what we want to see after coming at key liquidity pools. Okay, so we have an entry year high here. We don't, if this is bearish, we don't want to see price stab above the entry year high and reject lower, because that would prove to us that it's resistance. But now it's proven to us that this is not resistance, and we want to seek premium levels. So what we do then is we target premium levels step by step. And as we are doing that, I like to use old reference points such as order blocks and fair value gaps and volume imbalances. I want to use these old reference points and I want to use them as the support and resistance theory. So I was first looking at this one. If you could see, it says old fair value gap. And what we've done at this old fair value gap is we've already used it. We've provided resistance, provided support, and broke out of it. So that tells me, okay, we've used this old fair value gap right now. It's time to use another old reference point. And then I look to the left here, and we have this SIBI. So what I did with that SIBI was I divided it into 4 quadrants, 25%, the CE, and the 75%. So I have 4 quadrants here. And what I want to do is I want to target each of these quadrants step by step, seeing if they provide support, seeing if they provide resistance, until we can do the same thing we did here and break out of it and maybe seek another premium array. So what I use these old reference points for is pretty much like a range to work in. So you have like a classical range where you have MS high, MS low. That's a range. But now if we're trading within like a higher time frame imbalance, I use that as a range as well. And then this would be my premium, and then this would be my discount, or the D, and then this would be my premium, anything above the CE. So that was the narrative. Let's go into the 1 hour now. So on the 1 hour, we can see how those old reference points, they act as support resistance. With the intra-year high, that's an old high. The old high gets retested as support, rallies up higher. Price uses the CE here as a quick retest, as an instant order block, rallies higher. Now we're trading within the daily fair value gap. So I wanted to see price stay within this region, and at the time we were trading here, I wanted to see the New York session draw liquidity because I'm looking for a setup in New York. Where can that New York session trade towards? My target was simply the daily fair value gap CE. So first of all, I want to point out the weekly range. So we have each midnight opening here, this one being the weekly open. And notice how like the market is keeping clean lows here, we have a raid here, but then it rejects their clean lows there and such. And this is because it is very high resistance right now for the market to attempt to trade lower. Okay, and the market is attempting to trade lower, it's failing, it's providing failure swings. And that's because any down candle at the moment, this is what we call high resistance. Low resistance liquidity is upside. So you can see that every time a failure swing is provided, upside liquidity is easy and it runs smooth like butter. So why is this? Well, this is because the narrative, we're trading above the intra-year high. We want to see it provide that strength and not reject above this. That's one. And whenever you're in that environment and scenario, even clean lows, okay, sometimes it will rate it, but the majority of the time, the clean lows, even they can hold. They'll be very well protected, and it's simply due to accumulation. And with the low resistance delivery to the upside, don't force a raid on the clean levels. If it does, then you get it, but don't force it. So when I was going into New York session, I was looking at these levels here, and I was wondering, like, okay, do we need to clean these lows before we continue higher? And then I realized that, oh, okay, first of all, it is high resistance to take out clean lows. It is low resistance to go to the upside. Then I wanted to support that idea, that reasoning, with more than just, okay, it is high resistance to take out lows. If you can see here, this is where the market closed, and this is where the market opened, and that's a new day opening gap. So I saw, okay, the clean lows is reclaiming a new day opening gap. So it's not, it could be forming liquidity, but is it really? And then that's when I wanted to support that with intermarket analysis. So we have here the British pound, and then the moment we hit this end dog and kept Asia's low of clean lows, you can see that the pound took out its high. So we do have SMT divergence there. So not only does this say that, okay, this is strength here. Let me type this out. Not only does it say, okay, that low is strength, it also tells me, okay, whatever low was established in London, let's go into the 50-minute now. Whatever low or trend, we can see that London's trend here. Whatever low or trend established in London should continue. So this brings me to the New York session continuation profile. So when we go into New York session, there's only two profiles. There's three, but which is consolidation involved, but I'm looking for two to basically make trades on. And that's a New York session reversal and New York session continuation. So every time I'm going into New York session, that's what I'm thinking about. Do we continue the trend established in New York, or do we reverse it? So if we can come to this point here, if the trend wants to continue what was established in London, how is it going to do so? Well, then I start framing where it can continue from, and this low jumped out at me. So why this low? Well, if price wants to continue to the daily fair value gap CE, this consolidation expansion, this fair value gap right here, I want to see that remain open as a breakaway gap to show me strength that, okay, we want to go here. And with the strength from this and the high resistance liquidity delivery to the downside, all of that tells me that, okay, that is strong. We don't have to. Even if we have clean lows, we don't have to. Even if we have a fair value gap here, we don't have to. But what's the next best alternative? So that's when I mark out New York Open, and I use the opening time as a filter. So we can see the opening here, and every trade should be below the New York Open or at least near it. And then that's when I marked out two PD arrays. So the first one is this fair value gap here, and if we look at the open here, you can see that's very near to it. And below it, we have this order block here that is nested with a fair value gap inside of it, which caused the absolute low. So using the New York opening price, I was able to filter two PD arrays above it, which is close proximity, and below it, which is ideal. And this is the optimal trade entry I was looking for. So if New York session wants to continue the trend established in London, that's when I look for an optimal trade entry to continue. But then I use the logic, I'm using the narrative, I'm using the feedback I gain from the market to tell me what lows should I anchor from, and if I'm seeing this as a breakaway gap, then it's this one. Okay, so we have the optimal trade entry. We have the New York Open as a filter to tell me where am I specifically looking for high probability level. And then we have the high probability levels, which is this, the fair value gap, and the order block. And then we also have the draw on liquidity for where we want the New York session to go. Okay, so when you have all of this, what you want to see is you want to, let's say we're forming the low here. So let's say we're forming the low here. What you want to see from that point going onwards is everything used for selling here, you want to see them break. So this order block was used to sell price lower. Look at the bodies of this fair value gap, respecting that after hitting this. So hits order block, trades below the fair value gap again, resistance here, then goes lower. And I was watching this point as well, because that could have provided resistance and easily traded lower as well. But the moment we're in a discount, it should not stay in a discount that long. So what it does then is it changes its state of delivery. So when it changes its state of delivery, what you want to see is what was provided resistance now break. So that's when you can see this level breaks, this level breaks, and this level breaks, and that just tells you, okay, we're on side of the market. That tells you we're on side of the market, and the draw on liquidity, that's where we're heading towards next. So once we break out of this range here, what we can do next is draw like fulcrum points. So if this is where changes state of delivery happened to the downside as retracement, is high resistance, we expect it to fail, and here's where we change of the state of delivery again. Oh, by the way, it's nested with the 25%, that was even better. Now it changes the state of delivery to become low resistance to the upside. How far can it trade above this high? Well, you can use the optimal trade entry fib levels, and also you can use the fulcrum points from here, from where it changed the state of delivery from high resistance to low resistance. And it's reverse these, and then you can start targeting each of these step by step. So if you're a New York session trader, it goes a little beyond that because the trend is strong. But if you're a New York session trader and you got your business hours, entry here, partial above short-term highs, because you never know, there could be a New York session reversal. And then if there's not, well, you leave the majority of the trade on towards the fulcrum, draw, and then a little bonus. And that, my friends, was the New York session trade with the optimal trade entry setup, expecting a continuation due to the strength of the markets with trending, and everything on the downside is high resistance. And if you enjoyed this video, make sure to leave a like. Make sure to join the email newsletter to receive valuable information like this. And thank you for watching. I'll catch you in the next one. See ya.